Hey y'all, Mike back here with another Stock Strategy Explained, and today we're going to be talking about 2021, what my investing strategy is, what I think is going to happen in 2021, and what you should do with your investment portfolio. And make sure you give this video a thumbs up, otherwise 2021 is going to turn out poopy like 2020, and you don't want that to happen, right? And make sure you subscribe down below for more future updates on stock strategies, stock analysis, and IPOs. And just a quick disclaimer, this is not legal, tax, financial, or investment advice. Make sure you do your own research and homework before you do any sort of investing. And with that, let's get right into things. My first piece of advice here is make sure you have 6 months of emergency funds to really sustain yourself, just in case there's a market downturn, so you don't need to pull out cash from your investments to actually survive. My second tip for 2021 is keep buying, especially if you're a millennial like me and if you plan on holding very long term, 10, 20, and 30 years out. And that's definitely what I'm going to be doing with most of my portfolio. Buying into tried and true index funds like IVV and the S&P 500 and broad market shares. The reason for this is interest rates are still low, so it doesn't make much sense for me to put it in a savings account or put it into bonds when the stock market is actually doing much better. So interest rates are low, which means that people aren't going to be saving their money in savings accounts or buying CDs or buying bonds. Instead, they're going to put their money where it'll actually do work for them, which is into the stock market. And that's why I think long term, you should keep on buying into the stock market, keep on buying into tried and true index funds. The other thing to note here is that the Fed is going to keep on doing quantitative easing. And so you're probably asking, what the heck is quantitative easing? And honestly, it's just a fancy term to say the Fed or the central bank is going to be buying securities from the open market. And the big reason for this is they want to increase the cash flow and the amount of cash that's in the market. And what this tactically means is the Fed is going to be buying up government bonds and other types of securities to increase the cash flow in the market. And what this does is it lowers interest rates and puts more cash out there so that people have more cash. And if people have more cash, they're more likely to spend it or they're more likely to invest it into the stock market. So what this means for the average investor like you or I is with more money in the market and with less securities that are safer and produce less income like government bonds, it means that people will start to put their extra cash into the stock market where they can actually make a decent return. And what this really means is the stock market's going to keep on going up for the foreseeable future. At least that's my opinion and from what I can see. However, the one thing to note here is that a lot of people are saying there's probably going to be a K-shaped recovery in the economy, which is something that I actually believe in. So you're probably asking, what the heck is a K-shaped recovery? And it's essentially when half of the market, so the top end of the market, keeps on going up and recovers. And the bottom half of the market keeps on going down and doesn't recover. And if anything, it does worse. And we can actually see this with a lot of tech companies. So we can see Google, Tesla, and the S&P 500, they're continuously going up and they're recovering from their pre-pandemic levels. However, there are some industries like the travel industry that are still going down and not recovering at all. And so that's something to really keep in mind going into 2021. That there will be clear winners and there will be clear losers in this economy. And there's an opportunity to make some money here. So the big burning question that everyone has is, will there be a crash? Do you see a stock market crash in 2021? And my answer to that is, I really don't see one. But I could see a slowdown or a sideways market in 2021. I could also potentially see a small pullback, so something like 5% of a pullback. And this is mainly due to the K-shaped recovery. If we really see that half of the stock market isn't doing so well, but the other half is, then I could see a slowdown and or a pullback of the stock market. And so you're probably asking, why don't I see a crash? And I really see a crash when a lot of people want to pull out all of their money at the same time from the stock market. And I really don't see that. And a stock market crash does happen when people see that an industry is overvalued and they want to take out their money. We can see it with the dot-com bubble, when a lot of people invested into dot-com stocks and dot-com websites, and they realized they're not making any money, so then they pulled out all of their money from those stocks. In my opinion, I don't see a lot of industries or the overall stock market being overvalued. Yes, there are some that are overvalued, cough, DoorDash, but overall for the stock market, I think it's on a great trajectory. We can see that there are a lot of companies still making solid revenue. Some are even posting some of the best quarters they've ever had, and we can see that they're still making a profit. So in my mind, I don't think there's a strongly overvalued stock market here. And because of that, I don't see a lot of people trying to sell or cash out of their positions. The other reason I could see for people taking their money out and causing a stock market crash is if people need their money, right? If you need to pay rent, or if you need to buy food, or if you need to pay for your kid's school, you're going to take money out of the stock market. And my big hope here is that with unemployment benefits, with a better stimulus package, people won't be tempted to pull out their stock positions, their 401ks, which means that the market will still hold steady. Again, that's my hypothesis, but I strongly believe that the stimulus package will be good enough and that people and the economy will recover. But like I said, there could be a slowdown. And the big reason for this is, again, for that K-shaped recovery. I see the top half of the market doing really, really well, but the bottom half of the market, I could see not recovering as fast or still dragging along. And the big thing to take a look at here are small businesses. Small businesses are actually so important for the American economy. And fun fact, they make up 50% of America's GDP. So they're insanely important. But the problem here is a lot of small businesses are going out of business, or they're closing down, or they don't have enough money to sustain their businesses, right? So my worry here is a lot of these small businesses aren't going to open up as fast and they're not going to recover as fast. And worst case, a lot of them shut down permanently, which is a horrible situation. And because of that, I could see a strong slowdown and a sideways stock market to come in 2021 until that small business segment recovers, people can get their jobs back and people can spend more money. And so now that we've covered the broader market of what's going to happen with the stock market, what's going to happen with the overall economy, I think it's worth taking a look at specific industries that I'm interested in and I might potentially be investing in. However, I do want to say that most of my money in 2021 will still be going into index funds. I'll still be buying ETFs from the S&P 500, from broad market funds, and that's what I highly recommend that everyone does too. Keep buying your index funds, keep buying those tried and true funds. But the first industry that I'm going to be taking a look at is the gaming and the video streaming industry. So you can imagine EA, you can imagine Zynga, you can imagine Nintendo, you can imagine Netflix, and you can imagine Disney. The reason why I call these out is I feel like they've peaked, especially during the pandemic. Most people are at their peak in terms of playing video games or watching streaming. So I actually think for me, I'm getting out of most of my video streaming and video game investments here because I don't think that they will keep on their trajectory and I don't think that they'll grow more in 2021. However, the one stock to take a look at here is Disney. They are very heavily investing in their streaming platform with Disney Plus, but they make a lot of revenue and a lot of profit from their parks. And obviously with 2020, their parks were all closed. But in 2021, with the vaccine and with the coronavirus dying down, I really see a lot of their parks opening up in the second half of 2021. And I really see them making a lot of money. Not only because parents and kids want to go on a vacation and Disneyland and Disney World are the best places to do that, but I think there's a lot more content from Disney Plus that gets people excited, like The Mandalorian, like Mulan. And I see a lot of pent up demand and a lot of new demand to go to Disneyland and Disney World. So definitely keep a lookout for the Disney stock, definitely in the second half once they reopen a lot of their parks. So the second industry I definitely take a look at is the travel and hospitality industry. I see them actually making a strong recovery in the second half of 2021 once the vaccine has been widely distributed and once people feel safe and comfortable to travel again, especially around crowded groups and crowded areas. Definitely take a look at airline stocks like Delta and United. Definitely take a look at some of the hotel groups for business travelers to come back, like Hyatt and Hilton and Marriott. Definitely take a look at Airbnb. Again, disclaimer, I own Airbnb and I think they're a very strong buy, both before the second half because people still want to travel even with the pandemic, and after, once people can experience traveling like normal again. One stock hack to look at here is to monitor the travel industry, I would take a look at TSA numbers. TSA actually posts their daily amount of people who go through a TSA checkpoint, and you can definitely see and correlate once you see these numbers going up, you can definitely see the airline industry recovering, and you can see the hospitality and the hotel industry recovering. So definitely take a look. Link down in the description below if you want to take a look. So the other industry to take a look at is small businesses. I'm really hoping that small businesses make a strong recovery in H2 of 2021. And I think the best way to play this is through Square. Disclaimer, I do own Square stock, so I am a little bit biased. But I think Square really provides the best tools for small businesses to help them transact with customers. They give them point of sales and they give them credit card readers, which I think is essential for small businesses to make money. And so here, as we see small businesses recovering, as we see new small businesses popping up, I really think that Square will be best poised to give the tools to small businesses and make a lot of value long-term from these small businesses. The other one to take a look at is obviously Shopify. As a lot more small businesses are going online, they're realizing e-commerce is the future. And I really see Shopify as the best platform for a lot of small businesses to thrive selling online. So for those reasons, I think Shopify definitely should be on your radar for at least a research. So the other industry to definitely take a look at is tech in general. I'm very bullish on tech. You have Google, you have Apple, you have Tesla, you have Snap, you have Twitter. Obviously, like I said, with a K-shaped recovery, half the market's going to go up and recover and do really well. And I think that's tech. So definitely keep on buying tech. And the other interesting play here is something called Teckle. So this is a 3x leveraged tech ETF. This one's high risk, but it could be high reward. Because it is 3x leveraged, that means for every dollar that tech companies make, you'll be leveraged 3 times. You'll make 3 times that amount of money. But the only problem is when they lose $1, that means you're going to be losing $3 too. So definitely take a look at Teckle. They've been on a great upward trajectory, but again, it is high risk, high reward. So this wouldn't be a fair analysis if I didn't also look at industries that I don't necessarily love in 2021. The first big one is I'm neutral on Moderna, Pfizer, and AstraZeneca, especially if you're looking at them for coronavirus vaccines. I think coronavirus vaccines are pretty much priced in, and long-term, coronavirus won't be the same disease and it won't be as big of a disease anymore. And I think because of that, the vaccines were kind of a one-time thing. When you're thinking about 2022 and 2023, I don't really see coronavirus vaccines making these companies that much money. And so for those reasons, I think I'm pretty neutral on Moderna and Pfizer and AstraZeneca. Obviously, they still make a lot of money from other types of cures and a lot of types of pharmaceuticals. So definitely take a look if you're interested in pharmaceuticals in general. But when we're specifically looking at coronavirus, I think I'm pretty neutral because I don't think long-term they'll see too much lasting benefits from distributing and manufacturing the coronavirus vaccines. And the other big industry that I don't really love is the fitness industry. And I'm specifically looking at Peloton. I don't really see people continuing to buy $2,000, $3,000 exercise equipment and paying $50 a month for digital subscriptions to Peloton. I think these are kind of one-time things, especially during the pandemic, and I see people not buying and or even selling them and canceling their subscriptions. On top of that, I see a lot of competitors in the digital space. The biggest one I can even take a look at is Apple Fitness Plus. This one only costs $10 a month, and I think if people are still going to work out from home, they're going to go with the cheaper option. In the fitness industry, I see people going back to gyms. I see people going back to in-person classes to really get that sense and that motivation of community. So because of that, I'm actually underweight on Peloton and the whole digital fitness industry in general, and I would actually sell Peloton if you had any right now. So just to cap it all off, and a quick reminder, keep on investing in ETFs and index funds. I think these are tried and true, and you really can't go wrong with these. My 2 favorite are IVV, which tracks the S&P 500, and VTI, which tracks the broader market. And they're by Vanguard, which are solid ETF companies. So I really trust them a lot. And with that, we kind of wrap up my investing strategy in 2021 and what I'm going to do in a few industries that I'm very interested in. Let me know down below in the comments, what are you going to buy now, or at least what are you going to research now after watching this video? And make sure you subscribe down below for more future updates on IPOs and stock analysis and the stock market as a whole. And with that, I hope you guys learned a lot, and make sure you remember, don't invest in a company without understanding their product strategy. And most of all, make sure you remember to make money. Peace.